All right, let's dive into something that's got a lot of people talking. We're looking at what some are calling a potential perfect storm for XRP. And it's not just one thing, it's three massive, seemingly separate global events that are all starting to converge at the exact same time. We're going to break down what they are and, more importantly, how they all connect.
So the big question on everyone's mind is, what's about to happen to the markets? Some analysts are saying we could be on the brink of a truly historic weekend. The idea is that things could shift so dramatically, so quickly, that the financial world we see on Friday might look completely different come Monday morning.
So what are these three big forces? Well, first, you've got a huge interest rate decision coming out of Japan. Second, there's the very real possibility of a game-changing XRP ETF getting the green light. And third, and this one is enormous, the tokenization revolution, where Wall Street is finally moving trillions of dollars in assets onto the blockchain. Let's start with that first piece of the puzzle.
So here's how we're going to tackle this. We'll kick things off with the potential liquidity shock from Japan. Then, we'll look at the institutional money that's just waiting at the door. After that, we'll get into the mind-boggling tokenization trend, see how it all plugs into Ripple's ecosystem, and then wrap up with what could happen next.
Okay, first up, a massive economic event that's been brewing in Japan for a while now. The Bank of Japan is wildly expected to raise its interest rates, which would be the first time in years. This isn't just some small policy tweak. It could bring a 30-year-old financial strategy, known as the carry trade, to a screeching halt. So what on earth is the carry trade? Well, for decades, it's been this simple but incredibly powerful strategy. Big investors borrow Japanese yen for next to nothing. We're talking almost 0% interest. Then they take that cheap money and pour it into higher-yielding assets all over the globe. US stocks, bonds, and yep, even crypto.
The whole thing is surprisingly simple when you break it down. Step 1, borrow ridiculously cheap yen. Step 2, go invest it anywhere else for a much better return. And Step 3, pocket the difference. It's a strategy that has pumped trillions into the global markets for 30 years. But what happens when that free lunch suddenly ends?
And here's the catch. When the Bank of Japan raises rates, that cheap money vanishes overnight. All those investors are forced to slam on the brakes and do the exact opposite of what they've been doing for decades. They have to scramble to sell their assets, stocks, bonds, crypto, you name it, to pay back their yen loans, which are now way more expensive. This could trigger a massive, cascading sell-off, creating a global liquidity shock. Now, here's the crucial link. During a huge liquidity crisis, especially if it happens over a weekend when all the traditional banks are closed, the market desperately needs a way to move value, instantly, 24/7. And that's exactly the moment when an asset designed for instant settlement becomes unbelievably valuable. This is where proponents say XRP's fundamental utility could really shine. Okay, on to the second major force, institutional money. We're talking about a potential XRP ETF approval that could literally open the floodgates for billions, maybe tens of billions of dollars from Wall Street to come pouring into the market. And let me be clear, we are not talking about small fish here. WisdomTree, a huge asset manager with a staggering $109 billion under management, has an XRP ETF application sitting there waiting for a decision. Just to give you some perspective, competitors you might have heard of like CoinShares and 21Shares are about 15 times smaller. This is a true titan of finance stepping into the arena.
Now, if this ETS gets approved, analysts are forecasting that it could create unbelievable daily buying pressure. Think 10, 20, maybe even $40 million worth of XRP that needs to be bought every single day. And this leads to a fascinating problem. You've got this massive new wave of demand about to crash into a market where the available supply on exchanges is already shrinking. So it begs the question, where is all that XRP going to come from?
This brings us to the third force, and honestly, it's by far the biggest one of all, the tokenization of real-world assets. And this isn't just some niche crypto trend anymore. This is a fundamental shift in the plumbing of finance, as Wall Street itself starts moving its core infrastructure onto the blockchain.
But hey, don't just take my word for it. Carlos Domingo, who's the CEO of Xrp'S, one of the absolute leaders in this space, he recently said that tokenization is a $400 trillion opportunity. Yeah, you heard that right. That's trillion with a T. Let's just sit with that number for a second.
$400 trillion. That's the potential value of all the stocks, bonds, real estate, and other assets that could eventually be represented as tokens on a blockchain.
I mean, the sheer scale of this transformation is almost impossible to wrap your head around. So why is all this happening right now? Well, the regulatory picture has changed dramatically. For years, there was just uncertainty and, frankly, hostility. But the huge turning point came when the DTCC, that's the institution that clears pretty much every stock trade in the US, got something called a no-action letter from the SEC. This was basically a giant green light. It told them and the rest of Wall Street, go ahead, you can move forward with tokenization and we won't sue you. The floodgates just swung wide open.
And you can see why they're so eager. The benefits are just massive. Instead of waiting 2 days for a stock trade to settle, you get instant final settlement. Costs drop through the floor because you're cutting out all these middlemen. It unlocks trillions in capital that's just stuck, frozen in the old settlement process. This is exactly why giants like JP Morgan, Apollo, and BlackRock are all racing into this space. And they're starting with the biggest markets first: treasuries, bonds, and stocks.
So let's start tying this all together. You've got a potential liquidity shock, a brand new ETF for big money, and a multi-trillion-dollar tokenization revolution. It really starts to look like this is the exact moment that Ripple's entire ecosystem was designed for. Some people have started calling it an institutional liquidity monster.
So what does that actually mean, institutional liquidity monster? Let's break down the different pieces that make up this institutional-grade financial machine. Because it's not just about the XRP token itself, it's about the whole infrastructure they've built around it.
Okay, first, Ripple bought Hidden Road, which is a prime brokerage. That's basically a one-stop shop for big financial institutions. Then you have Ripple Prime, which is already serving 1,000 institutions and processing trillions in volume. You add in a regulated stablecoin on the XRP ledger, plus actual banking licenses, and what you get is a complete end-to-end ecosystem built for big money finance.
And this really gets to a super important distinction. Think about a company like Coinbase. They've done a brilliant job of capturing the retail market, right? But from day one, Ripple has been laser-focused on the institutional side. They're playing two completely different games. Retail is big, for sure, but the institutional market, well, that's where the trillions of dollars actually live.
So, what's the next move? Where does all of this lead? It seems like we have three incredibly powerful forces, all on a collision course. And they're all pointing to a need for a totally new kind of financial plumbing, one that's fast, super efficient, and crucially, always on.
So to quickly recap this perfect storm scenario, number one, you get a global liquidity shock that creates an urgent need for a 24/7 settlement asset. Number two, an ETF kicks the door open for billions in new institutional money, creating a huge supply crunch. And number three, you have a $400 trillion tokenization wave that needs a fast, neutral settlement layer to move all that new value around.
I think I'll just leave you with this one last thought from analyst Jake Claver, who's been watching these trends converge very closely. Now, of course, nothing is ever guaranteed in these markets, but the convergence of these three forces is so significant that, as he puts it, we might wake up on Monday morning to a completely different market. What do you think is going to happen?